Hey everyone, it's Tom Kradza and you're on another morning walk with me here. Let me try to get out of the sun. So we're going to cover a lot. Frank sent in a question to Rockstar and he said, hey guys, I notice a lot of people are coming all the way from Toronto, all the way down to Niagara. I assume he lives in the Niagara area, and they're buying properties all the way along from Toronto to Niagara and you know, quote unquote, overvalued properties. And he's asking, is it too late for him to participate in the real estate market, or, you know, should he wait a little longer? How long can this market go before it crashes, and then maybe it'll be a better time for him to purchase then? You know, when is this all going to end, and when will this kind of all this market activity come to an end? When will the market change, allowing him an opportunity to buy? So here's a couple things that we think, Frank, that you should know, and I think this will apply to a lot of people. When you are thinking about buying real estate in the Greater Toronto Area, you have to understand that our fundamentals in this area are some of the best in the entire world. So for example, we get 250,000 immigrants into Canada a year. For context, think of it this way. The population of Canada is about 36 million. The population of the US is about 350 million. Somebody can kind of fact check that for me, but I'm going to say about 350 million. So you would think that their population is 10 times greater than ours. So if their immigration was 10 times greater than ours, they would get about 2.5 million immigrants a year. They only get about 1.2 million immigrants a year. So relatively speaking, they get about half the amount of immigrants relative to the population base than we do. So we get a lot of immigrants into this country. And then on top of that, a whole bunch of them, about 100,000 a year, come right into the Golden Horseshoe or the Greater Toronto Area. And that affects everything from Toronto all the way down to, Frank, where you live in the Niagara area. And that's causing a lot of demand for property. On top of this, south of Toronto, we have a lake. You can't build on water. And then north, all around the Greater Toronto and Golden Horseshoe area, we have the world's largest green belt, which you can't develop on either. So kind of the Golden Horseshoe is a little bit landlocked for these two reasons. And with all the immigration coming into the country, you just naturally have a lot of demand for an increasingly smaller area to produce the supply. So that's something that what we would refer to as the fundamentals of why you would be looking at the Toronto area to invest in real estate. But here's something that you should consider, Frank, if you're thinking about real estate, is that the game of money and the policies of money trump the fundamentals. When everybody thought the market was going to collapse in 2008 in Canada, the Bank of Canada dropped interest rates so low that it helped push along the real estate market, and we really didn't get a big correction in real estate prices along that time. So, you know, you have to look at the fundamentals, and yes, everybody is driving from Toronto and bidding up properties all the way along the Golden Horseshoe, but the fundamentals, the policies of money can trump the fundamentals. So if interest rates go even lower, this game may go on longer. If the banks don't tighten their lending rules, this game may go on longer. Now, if they change the rules of lending, or if interest rates change, and for those of you who think they can't, back in 1990, in the span of 4 months, the Bank of Canada raised interest rates over 2%. One of the banks in Canada, if our memory serves correctly, raised interest rates on fixed mortgages 2.9% in about 30 days. So if that happens, that's kind of the policies or the game of money. If the price of money increases like that, that can trump all these fundamentals that we're talking about. So this makes it tricky, Frank, if you're going to buy your own place of residence, somewhere for you to live in personally, because those can swing the market. But if you're buying an income property, although we need to pay attention to the fundamentals and to the rules of money, the game of money, the policies of money that go on with the Bank of Canada and the banks, we look at it from an investment point of view, the income and the expenses. Can we buy a property where we are comfortable the income will sustain itself in any market? And then where we can control the expenses in any market. If we can find properties like that, we are less concerned than about the price point of the piece of property. And we will buy the property if we like the income, if it's greater than the expenses, and we will ride out the price moves of the property up and down over the next 2, 3, 5, and 10 years. So income and expenses is what a true real estate investor looks at. All the price points of real estate are more important to us if you are buying it for your own self and you're going to live in the property as your primary place of residence. Then perhaps you want to try to time these things a little bit. But for investors, we're looking at income and expenses. We're paying attention to the rules and the policies and the games of money and the fundamentals of the area. But in any of those situations, we can always find good properties where the income and the expenses we like. So that's a lot to share in a quick Rockstar Minute. Hopefully you took some value from that. Until next time, your life, your terms.